Break-even point and business decisions. This topic is based on 2 books. Managerial Accounting written by Garrison, Noreen, and Brewer. Management and Cost Accounting written by Drury. For more information, please visit the e-learning platform. By Karim Sharf. Take a few minutes and review the summary of cost behavior for variable and fixed costs. Total variable cost varies in direct proportion to changes in the level of activity. Although variable costs change in total as the activity level rises and falls, variable cost per unit is constant. Fixed cost. A cost that remains constant, in total, regardless of changes in the level of the activity. In much of France, China, and Japan, management has little flexibility in adjusting the size of the labor force. Labor costs tend to be viewed as more fixed than variable. In recent years we have seen some changes in management's flexibility. In the US and United Kingdom, management has much greater latitude to adjust the size of the labor force. Labor costs in some industries are still viewed as more variable than fixed. Fixed costs only stay constant in total within the relevant range of activity. As we adjust the relevant range of activity upward or downward, we see changes in total fixed costs. These upward or downward adjustments are generally very wide. An example of changes in total fixed costs might be rent for office space. A company can rent 1,000 square feet of office space for 30,000 dirhams per year. If the company fills its current space and needs additional office space, the next 1,000 square feet will cost an additional 30,000 dirhams per year. So when a company needs 1,000 square feet of office space, the fixed office rent is 30,000 dirhams. If another 1,000 square feet are needed, the fixed office rent will be 60,000 dirhams. Mixed cost has both a fixed and variable element. If you pay your electrical bill, you know that a portion of your total bill is fixed. This is the standard monthly electrical charge. The variable portion of your electrical costs depends upon the number of kilowatt hours you consume. Your total electrical bill has both a fixed and variable element. The graph demonstrates the nature of a normal electrical bill. The mixed cost line can be expressed with the equation y equals a plus b times x. This equation should look familiar from your algebra and statistics classes. In the equation, y is the total mixed cost, is the total fixed cost, or the vertical intercept of the line, b is the variable cost per unit of activity, or the slope of the line, and x is the actual level of activity. In our utility example, y is the total mixed cost, is the total fixed monthly electrical charge, b is the cost per kilowatt hour consumed, and x is the number of kilowatt hours consumed. Read through this short question to see if you can calculate the total utility bill for the month. How did you do? The total bill is 100 dirhams. Contribution margin is defined as sales less variable expenses. In the case of Racing Bicycle Company, contribution margin is 100,000 dirhams. Contribution margin is used first to cover fixed expenses. Any remaining contribution margin contributes to net operating income. Sales, variable expenses, and contribution margin can also be expressed on a per unit basis. For each additional unit Racing Bicycle Company sells, 200 dirhams more in contribution margin will help to cover fixed expenses and provide a profit. Each month Racing Bicycle must generate at least 80,000 dirhams in total contribution margin to break even, which is the level of sales at which profit is zero. If Racing sells 400 units a month, it will be operating at the break-even point. If Racing sells one more bike, 401 bikes, net operating income will increase by 200 dirhams. You can see that the sale of one unit above the break-even point yields net income of 200 dirhams for Racing Bicycle. If we develop equations to calculate break-even and net income, we will not have to prepare an income statement to determine what net income will be at any level of sales. For example, we know that if Racing Bicycle sells 430 bikes, net income will be 6,000. The company will sell 30 bikes above the break-even unit sales, and the contribution margin is 200 dirhams per bike. So, we multiply 30 bikes times 200 dirhams per bike and get net income of 6,000 dirhams. The relationship among revenue, cost, profit, and volume can be expressed graphically by preparing a cost-volume profit (CVP) graph. To illustrate, we will use contribution income statements for Racing Bicycle Company at 300, 400, and 500 units sold. 400 expressed the break-even point. If the company sells more than 400 units, the company will make a profit. If the company sells less than 400 units, the company will make a loss. In a CVP graph, or cost, profit, and volume graph, unit volume is usually represented on the horizontal x-axis and dirhams on the vertical y-axis. Once we have settled on this convention, we will plot the fixed cost. The first step begins by drawing a line parallel to the volume axis to represent total fixed expenses of 80,000 dirhams. Next, choose some sales volume, for example, 500 units, and plot the point representing total expenses, e.g., fixed and variable, at that sales volume. Draw a line through the data point back to where the fixed expenses line intersects the dirham axis. Finally, choose some sales volume, for example, 500 units, and plot the point representing total sales dirhams at the chosen activity level. Draw a line through the data point back to the origin. The break-even point is where the total revenue and total expenses lines intersect. In the case of Racing Bicycle, break-even is 400 bikes sold, or sales revenue of 200,000 dirhams. In other words, if the company sells more than 400 units, the company will make a profit. If the company sells less than 400 units, the company will make a loss. We can calculate the contribution margin ratio of Racing Bicycle by dividing total contribution by total sales. In the case of Racing Bicycle, the contribution margin ratio is 40%. This means that for each dirhams increase in sales, the company will produce 40 cents in contribution margin. We may also calculate the contribution margin ratio using per unit amounts. Let's see how we can use the contribution margin ratio to look at the contribution margin income statement of Racing Bicycle in a little different way. If Racing is able to increase its sales by 50,000 dirhams, 250,000 minus 200,000, it will increase contribution margin by 20,000 dirhams, that is, 50,000 dirhams times 40%. We can accomplish break-even analysis in one of two ways. We can use the equation method or the contribution margin method. We get the same results regardless of the method selected. You may prefer one method over the other. It's a personal choice, but be aware there are some problems associated with either method. Some are easier to solve using the equation method, while others can be quickly solved using the contribution margin method. The equation method is based on the contribution approach income statement. The equation can be stated in one of two ways. Profits equal sales less variable expenses, less fixed expenses, or sales equal variable expenses plus fixed expenses plus profits. Remember that at the break-even point profits are equal to zero. Here is some information provided by Racing Bicycle that we will use to solve some problems. We have the contribution margin income statement, the selling price and variable expenses per unit, and the contribution margin ratio. The break-even point in units is determined by creating the equation as shown, where Q is the number of bikes sold, 500 dirhams is the unit selling price, 300 dirhams is the unit variable expense, and 80,000 dirhams is the total fixed expense. We need to solve for Q. Solving this equation shows that the break-even point in units is 400 bikes. We want to be careful with the algebra when we group terms. 400 bikes is the level of sales at which profit is zero. If the company sells more than 400 units, the company will make a profit. If the company sells less than 400 units, the company will make a loss. The equation can be modified as shown to calculate the break-even point in sales dirhams. In this equation, X is total sales dirhams, 0.60, or 60%, is the variable expense as a percentage of sales, and 80,000 dirhams is the total fixed expense. We need to solve for X. Solving this equation shows that the break-even point is sales dirhams is 200,000 dirhams. Once again, be careful when you combine the X values in the equation. 200,000 dirhams is the level of sales at which profit is zero. The contribution margin method has two key equations: break-even point in units sold equals fixed expenses divided by CM per unit, and break-even point in sales dirhams equals fixed expenses divided by contribution margin ratio. Let's use the contribution margin method to calculate break-even in units sold. The break-even in units sold is 400 dirhams. Let's use the contribution margin method to calculate break-even in total sales dirhams. The break-even sales revenue is 200,000 dirhams. We can use either method to determine the revenue or units needed to achieve a target level of profits. Suppose Racing Bicycle wants to earn net income of 100,000 dirhams. How many bikes must the company sell to achieve this profit level? Instead of setting profit to zero like we do in a break-even analysis, we set the profit level to 100,000 dirhams. Solving for Q, we see that the company will have to sell 900 bikes to achieve the desired profit level. A quicker way to solve this problem is to add the desired profits to the fixed cost and divide the total by the contribution margin per unit. Notice we get the same result of 900 bikes. The margin of safety helps management assess how far above or below the break-even point the company is currently operating. To calculate the margin of safety, we take total current sales and subtract break-even sales. Let's calculate the margin of safety for Racing Bicycle. Racing Bicycle is currently selling 500 bikes and producing total sales revenue of 250,000 dirhams. Sales at the break-even point are 200,000 dirhams, so the company's margin of safety is 50,000 dirhams. We can express the margin of safety as a percent of sales. In the case of Racing Bicycle, the margin of safety is 20%, 50,000 dirhams divided by 250,000 dirhams. Take a minute and read the information of this slide. Thank you for watching.